Hello and welcome to our special podcast where investors discuss what has changed during the COVID-19 pandemic and what are the startups in the Indian ecosystem doing to tide over this. I am Payal Ganguly and today we have with us Padmaja Ruparel, co-founder of Indian Angel Network. Welcome to the show, Padmaja.
Padmaja, starting with the current scenario, right? How do you look at the pandemic as well as its impact on early stage investing? Do you think that there is a very clear implication which this will have on the funding as well as exit rounds for early stage companies?
So first of all, the pandemic is really disastrous. Right, and very, very, very unfortunate. It's unfortunate not only from the perspective of health, but also the economic issues that has created, especially with lockdown, restriction on movement, etc. I think it has brought a grinding halt to many things in life, right? And I think the wheels of economy in some ways have been slowed down completely. Okay, there are some which are working, but I think largely it's a slowdown. So that, of course, is very unfortunate, and my heart does go out to people who are getting impacted with this, especially health-wise. I think what this is going to have on a startup ecosystem is unimaginable. Even if you look at large companies, they have been hit and they're grappling with this, and they have a much better way of handling it, or they have a cushion in terms of cash reserves, they have cushion in terms of resources, etc. But startups, by the very definition of being startups, don't really have this luxury. They are bootstrapped, they have very little cash reserves, their teams are small, and very many of them are not very experienced, if I may say so. So it is a complete it's a real hit in the gut in some ways, as I would call it. Yes, there'll be more failures than usual, I would say, because they're obviously losing revenues, many of them, especially those that are not focused on the need of the hour. They are losing revenues. If they're not showing revenues, it's going to be hard for them to raise next rounds, right? So we will see a higher percentage of companies going south. There are a few, and I would say those are increasing day by day, that are focused on the need of the hour. So if you look at a lot of companies like HEALTHTECH, PHARMA, bio, ventilators, PPEs, companies focused on them, innovations focused on them, they're suddenly getting immense interest. We have a company, Noka, which was into robotic cleaning of solar panels through a robotic device which is waterless, right? Yeah. So that was exciting. But the team is excellent in engineering and thinking through, and they've suddenly pivoted to making ventilators. And now there are a whole lot of large industries who are engaged to help them in terms of manufacturing it, getting it manufactured at their, at their factories, opening up their supply chains, helping design, getting approvals. Everything is moving on WhatsApp and calls, but everything is moving at absolutely lightning speed. So, this has given an opportunity to many startups to innovate and create an immense interest, what could have taken them years, but suddenly it's become center stage, number one. And number two, because the need is so deep and wide and global, that I think the entire ecosystem in terms of industry, government, domain experts, investors, they're coming together to say how fast can we move it, because reality is not just building the company, but the reality is that we need these products desperately right now. So these companies will move to a next level much faster than what would have happened. And clearly, I think next round investors will look at this because this is hitting everybody. I also think that it's an opportunity which we are seeing of taking a lot of things online for companies to swivel very quickly and go online. So if you look at companies, we've looked at companies like FSM, which is into music education, which a large part of the majority of the model was offline. So they had centers and all the rest of it. With COVID, they have completely, and I must doff my hat to the entrepreneur team, both Tanuja and Dharani. They swiveled rapidly and went in for an online model and are now got back onto their feet. Yeah, right. They won't make the same kind of revenues that expected, but the point is they've not come to a grinding halt. And I think if companies can just continue, sustain and manage to hold it, I think that's more important than saying, have I achieved my projections?
Are you personally encouraging your portfolio companies to look at alternatives which fit into the current scenario as such?
Provided they can do it, yes.
Okay.
Provided they can do it, yes. So as I mentioned, FSM's online tech play was a little further out into the plan. We shifted it. Right? We said, hey, move it, because the offline is not going to work anyway.
Right. How willing are most of these companies to adapt? Have you had any resistance also, considering that you have such a diverse portfolio of companies?
I would address it in two ways. Okay. I think entrepreneurs at the end of the day, good entrepreneurs at the end of the day are very practical people. If they're not practical, they cannot be entrepreneurs.
Okay.
Right? So if I'm purely an innovator who's developing a research or a innovation, but not thinking about how I'm going to monetize it, I will be totally in love with my innovation, hoping somebody picks it up and uses it. When we had started having these discussions with our companies, and we have been having one-on-one discussions with our portfolio companies, we've just finished an early morning Zoom call with our companies, so they get one-to-many. And we are being able to, they've sort of, the first 2 days was difficult for them to understand what has hit them, but I think they're gradually settling down and accepting it. I think the other piece, to be very honest with you, what has worked is the quality of mentoring that we have been able to provide. The quality of mentoring makes hell of a lot of difference, right? Okay. One is to say you should do this or you shouldn't do this. The other is to say we think you should do this because in our lives we have seen this happen and this is how we've handled it. So when you have experiential, I think that makes huge essence. And when you have on the ground practical knowledge, which is very logical, which is very common sense, I think it works.
You have been saying that you're going about work as usual with the virtual deal closure, right? So how are you going about the process, and when did you guys decide upon this entire program so that this doesn't affect the companies which you were evaluating?
I don't think I sent out any mail to anybody to say, okay, we are not closing shop, we're going to continue. There was no need. I mean, how can you stop? Right? So that's one part. The second is we decided that our processes broadly, why were those processes put together? How did we create that operational framework? So we said, okay, we need to have pitch sessions. We need to have entrepreneurs presenting, right? Now, why do I need to do it offline? Can I take it online? Right? Because there is a need to be safe, there's a need to be well, people are not commuting. Those are the realities. Those are the practicalities. I can't change those. Right? So we decided, let's have a normal pitch session on a Saturday that we always have and take it online. Okay. It took a little effort to get everyone in, but guess what happened? 68 investors in that pitch session.
Wow.
We took this as an opportunity to say, listen, this could be a great way of getting a wider engagement. And it happened. And entrepreneurs get shortlisted and diligence and all of that is happening. right? And because in today's world, most of the deals that are happening where there is an online element.
Right.
Most of the business has moved online, right? And online is going to be anyway, was the horizontal on which scale was happening, even before COVID, right? So I think a lot of the work we're trying to do on closing deals will happen online. So people are opening up their tallies or their accounts for us to diligence. All of that is happening, right? We are giving emails to say that, how to do it. We are creating a lot of FAQs. We are creating a lot of processes. We're doing all that. Yes, it's added to the work.
Okay.
But it's added to the work with not on a, it won't last on a sustained basis. We are added to the work because when you do a new modality of working, you need to put the operational processes and frameworks around it, right? We do have a proprietary technology platform for our investors to commit and engage, but everything else, all operational software is what you and I both using. It's in the offline piece that I will see some challenges. If we are investing in something which has an offline manufacturing base or a supply chain, those I think we will see some challenges. And what we are thinking is we will shortlist those companies, take it to as far as we can so we don't lose time. And as soon as the lockdown lifts, maybe just quickly do the offline pieces. So we'll sort of re-sequence it a bit and make that happen. So there will be delays on those deals. I don't deny that. But it's not that we're going to deny those deals as of now. But having said that, the investor interest today is clearly online, pharma, health, cybersecurity, and all of those.
Because you also have an IAN fund, right? And it was supposed to look at giving the much needed bridge to companies you've invested in, which are showing promise, and you want to be a part of that follow-on fund. Will the activity of IAN fund increase? Because, there'll be certain delays in terms of exit pipeline or probably getting the next set of investors on board.
See, across the board, next round investment is going to take time, and it's not going to be easy. It's very, very early. If you ask me how long will it take and when will it open up, I can't give you that answer today. Honest to goodness, I doubt if anybody can. As a fund, to say, where am I going to deploy? How much do I need to hold on for my own companies, right? Because they also know that the Series C investor, the follow-on investor to them, is also going to take time. So you have to conserve a little bit of your corpus more than usual to make sure that your companies you are able to provide them some runway if required. So yes, there is going to be a delay. Yes, it's going to be tougher. Life which is coming up is going to be tougher, no doubt. The companies that survive this, right? It's the tough ones which will survive this, but they will emerge much stronger, right? And that to me is a very big hallmark of good, solid businesses. They are getting pushed into looked at. That's what I was telling you, that the drug controller has to reduce his time. We were telling them this for a long time. Now they have to do it per force, right? We were telling people that loans should be online and quick for startups because, funding delayed is funding denied for startups, right? They just don't have the bandwidth. They don't have the staying. It's starting to happen. Right. So some good things are coming out of it, that people have to think of new models, new ways of working, new thing. That's one thing. I think today what is required is a much more empathetic view from a lot of government organizations, from banks, from other funding organizations. It will have to come, right? And all I'm trying to, if I may use your platform or leverage your platform to give out a message, that companies and startups are really, really, really grappling with the situation today. Please think of any processes, any operational load that you can remove, right? If there's any anything that you can right shift, please right shift. Today, investors who are investing, right, I actually doff my hat to them. It's not easy to take a call on a risky asset class, unlike when you're grappling with markets which are not doing well, economic situations are bad, cash is not, liquidity is tight. So I think in some ways, can we encourage them by saying, okay, investments done from, let's say, March 16th to December 3rd, end of December, some period, let somebody decide. Can they be just relaxed on, let's say, any returns they may get on that? Because this is not, from their perspective, this is critical money going into the startup ecosystem, right? And if it does not go in, job losses are going to happen. Irrespective of whatever anybody says, if businesses don't have money, how are they going to pay rent? How are they going to pay salaries? Right? Yeah. So I think let's respect the investors who are investing in this period, right? And that period can be defined in terms of months and dates. But I think that needs to be done. And the last thing I would say is we need money which is sitting in government coffers to come in for startups. Let it be matched. Let there be soft loans. Let there be structures which is easy for startups right now. They just need survival money.
We look forward to more relevant announcements to help startups and the ecosystem survive the period of lockdown and the imminent downturn in economy which is going to follow the COVID-19 pandemic. Stay tuned and keep listening to TechCircle.in for the latest.